What if I told you that waiting until 70 for Social Security, the advice that everyone says is the best strategy, could actually shrink your retirement savings by hundreds of thousands of dollars? It's true, and today I'm going to show you why on the Howdy Neighbor Retirement Show.
It's the Howdy Neighbor Retirement Show.
Howdy neighbor, I'm Michael Andrews with Andrews Insurance and Advisory, and you're listening to the Howdy Neighbor Retirement Show, where every week we tackle real-life questions about retirement, Medicare, and Social Security. But today we're doing something a little bit different. Once again, brought back by extremely popular demand, we are going to do a full-blown Michaelatorial. Yes, another Michaelatorial, and it's an important one because this idea of always wait until age 70 for Social Security, well, it sounds good on paper, it looks good in a spreadsheet, and it makes a lot of sense in theory. But when you sit down with real people, real retirees with savings and fears and real life happening all around them, the story gets a whole lot more complicated. So today, we're going to break down the trade-off between delaying Social Security. Here's the part that almost nobody talks about. When you retire before 70, let's say 62, 63, 64, whatever, you still need income. Your bills don't stop, your groceries don't stop, and your lifestyle doesn't stop. So if you delay Social Security, where does that missing income come from? Well, it comes from your retirement savings. Every month that you hold off on filing, you're pulling a little bit more from your 401k, your IRA, your brokerage account, and wherever you've built your nest egg. And every dollar you withdraw isn't just a dollar gone today, it's a dollar that's no longer invested and it's no longer growing for you. That's the part that the spreadsheets don't show you. That's the hidden cost of just the wait until 70 advice that we hear from so many people. So let me put this in real life terms. Every year I meet with people who come in with their paperwork and they say something like, "Hey Michael, everyone says wait until 70. Here's the smart move." That's the smart move, right? And they're often surprised when the analysis shows the opposite. When we look at their income needs, their savings levels, and what they would have to withdraw to make it 8 years without Social Security, the math usually tells a very different story. Because delaying doesn't just mean bigger checks later, it also means bigger withdrawals now, and those withdrawals can shrink a portfolio faster than most people expect. And that is the true trade-off. Do you want to maximize your Social Security benefit, or do you want to maximize your retirement savings? In many cases, you can't maximize both. Most retirees have to choose which one matters most to them, and that choice depends on a bunch of different things like health, taxes, survivor benefits, income needs, risk tolerance, and the size of their nest egg. That's why this isn't a one-size-fits-all decision. It's a balancing act, and the balance looks different for everyone. So let's walk through a couple simple scenarios, something that I see when I'm visiting with people. And let's say that you plan on retiring at 62. You need about $80,000 a year in gross income to maintain your lifestyle. Your full retirement age Social Security benefit is right around $2,400 a month, so about $29,000 for the entire year. You've also built a pretty solid nest egg of about $1.4 million in savings. Now, the moment you retire, you've got a choice. Option number one, file for Social Security at 62. Your monthly check will be smaller, but that income helps cover part of your $80,000 need, which means your withdrawals from savings stay lower, your portfolio stays invested longer, and more of your money continues to grow. Option number two, delaying Social Security until 70. This is where things get interesting. If you delay filing, every dollar you need for income from 62 to 70 has to come from your savings, all 8 years worth. It's just not the withdrawals that matter, it is the growth those dollars would have had if they had been invested. And that is the hidden cost, the hidden opportunity cost of delaying. So let me show you how that works. Let's say that your investments earn about 4% a year. By the time you turn 70, your portfolio would roughly be $200,000 to $250,000 smaller if you delay versus taking Social Security at 62. You eventually catch up, but not until your early 80s. If your investments grow by, let's say, 6%, then that gap gets even wider. So you're down roughly $250,000 to $300,000 at age 70, and you don't break even until you reach age 84 or 85. When we get to an 8% return, that's when we start really seeing interesting scenarios play out. So that's when you're going to have a gap somewhere around $300,000 or more. The break even in that case happens closer to age 88 to 90. And if the market performs exceptionally well in those early retirement years, well, you may not even break even at all. And these aren't cherry-picked numbers. They're the exact kind of scenarios that I run for clients every week. And the point is simple. Delaying Social Security isn't free. It buys you a bigger check later, but you pay for it up front by shrinking your portfolio faster. And depending on your investment returns, that cost can be significant. Now, does that mean delaying is a bad decision? Absolutely not. It just means that the math isn't just always this one-sided view of, hey, wait until 70, just like everyone makes it sound like. Now, before anybody hears this and thinks, well, Michael says nobody should delay filing, I want to pump the brakes on that really quick, because delaying Social Security can still be an incredible strategy for the right person in the right situation with the right goals. The problem isn't the strategy itself. The problem is the idea that it's automatically the best strategy for everyone. Real retirement planning just isn't that simple. There are a bunch of factors that can swing this decision one way or the other, and here are some of the big ones. Number one, taxes. Where your income is coming from matters. If your early withdrawals are from taxable accounts, that create one set of outcomes. If they're from IRAs or 401ks, that creates another. Pulling from Roth accounts, that changes the equation all over again. So sometimes delaying Social Security helps lower your tax bill, and sometimes it can increase it. It all depends on your mix of accounts and how you plan to use them. Another one is survivor benefits. So delaying your benefit increases what your spouse may receive if you pass away first. For couples where one spouse has a much higher earning record, this can be a meaningful reason to wait. Another one is health and longevity. If you're in great health and your parents lived into their 90s, delaying Social Security can absolutely pay off for you. However, if your health isn't great, or if you simply want to enjoy more income early in retirement, then in that case, filing early might be the better fit. Market conditions. So if the market is volatile, or if we're in a downturn, withdrawing more from your savings early can create what's called the sequence of return risk. That risk can make delaying Social Security dangerous. On the flip side, if the market's strong and growing, the trade-off looks less painful. Another one's Roth conversions. A lot of folks choose to delay Social Security not because of the Social Security benefit itself, but because they're using those years to do Roth conversions at a lower tax rate. That can be incredibly smart, but again, it's one piece of a much bigger puzzle. So here's the bottom line. There is no magic age that is best for everyone. There is only what's best for you, your goals, your taxes, your health, and your retirement savings. Some people truly do benefit from delaying Social Security until 70, and others, well, they don't. And most people fall somewhere in between. This is why blanket advice falls apart in the real world. Retirement planning isn't a formula, it's a conversation. So today's Michaelatorial, we broke down the hidden cost of delaying Social Security. Yes, waiting until 70 gives you a bigger check, but it also means pulling more from your savings in those early years, and that trade-off isn't the same for everyone. The right filing age depends on your income needs, taxes, health, survivor benefits, and how comfortable you are spending down your nest egg. There's just not a one-size-fits-all answer, just the answer that fits your retirement. So next week, we will be back to our normal listener questions. So if you've got a question you'd like for me to tackle on the show, shoot me an email at michael@andrewsadv.com. I read every single one of them, and I might just answer yours on a future episode. And I also have one more question for you. Are you confident in your retirement plan? It doesn't cost anything for me to take a look, but not letting me, man, it could cost you thousands. So if you're ready to take this relationship to the next level, you can call or text me at 918-842-7379 or head over to andrewsadv.com. Click on my work calendar to schedule a phone call that works for you. And don't forget, the full replay of today's episode drops every Tuesday evening on the Howdy Neighbor Retirement Show Facebook page and YouTube channel. Give it a like, leave a comment, and share it with a friend who could use some good neighborly retirement advice. Thanks again for listening, and we will see you all next week right here on the Howdy Neighbor Retirement Show. Thanks.
It's the Howdy Neighbor Retirement Show, helping you plan so your money will grow. No need to worry, we'll make it clear. Medicare and retirement right here.
A lot of people are saying the Howdy Neighbor Retirement Show is the most amazing show, and the ratings frankly proven.